What's going on, beautiful people? Palantir is up $20 a share. Palantir hit $20 a share in after hours. Palantir actually hit $20 a share earlier today. This is a screenshot because I know Amit said that he missed it, and I just posted this on Twitter or X. If you guys want to follow me, my name is xfinance411 on Twitter. Definitely check it out. Palantir is an absolute beast, and there's a lot of things that's happening right now. There's fundamentals, future growth, anticipation of some big contracts coming in, anticipation of S&P 500 inclusion, and of course, there's this bubble of AI that everybody's talking about. Now, whether AI is a bubble or not, we could all agree that bubbles take a long time to pop. And if that's the case, this is just the beginning of it. However, I do believe that AI is going to be huge. The same way that .com bubble was a bubble, some of those companies, including Amazon, survived. They're not the only company, but most companies did in fact get murked. This is exactly what Dr. Alex Karp says, that most of our competition is cockroach.com that's literally about to go bankrupt. It seems that every single day, Palantir is more and more showing that they not only talk the talk, but they walk the walk. Earlier today, the Department of Defense, they literally just announced it around 10 minutes ago, that they picked Palantir as their partner to coordinate DoD's 3500 and 3600 megahertz bandwidth with commercial use cases. If you don't know, this is something that's used for radars and some other Department of Defense military-grade products, and also is used in today's 5G applications. So there has to be some coordination between the DoD and the private commercial sector. And Palantir was literally picked as their partner. I'm going to read you this publication in just a moment, but let me talk a little bit. Let me, freeball a little bit and just go off the top of my dome. Dan Ives comes out with this crazy analytics of Palantir, saying that in his analysis that Palantir is a $25 company in a bull case scenario. This absolutely made Palantir fly on Friday, and it continues to fly today. I'm sure some short interest has something to do with this as well. We have earnings coming up on August 7th. Palantir needs to, make no mistake about it, needs to absolutely have a slam dunk and a home run all intertwined in one. They need to come with a extremely strong earnings report, similar to what happened with SoFi today. Let me explain. Pre-market SoFi is up nearly 10%. As soon as earnings hit, it's down 2.5%. People started listening to the earnings. People started listening to Anthony Noto. And although on face value, maybe on the exterior shell, the earnings don't look good. But once you look under the hood, the earnings look absolutely amazing. And they are absolutely amazing. And you see that SoFi is firing on all cylinders. Don't be so short-sighted. Well, this is kind of what Palantir needs. Not kind of, exactly what Palantir needs. The revenue is one thing, earnings per share is another thing, but really what we need is forward-moving guidance. I, for one, am going to be looking for net retention per customer. Why? If every AIP client needs to be first a client of Palantir Foundry, that means that a Palantir Foundry client is now going to spend double or an X amount % higher for AIP, right? If you're spending $1 million for Foundry, for example, you bet your bottom dollar AIP is going to cost you a certain percentage of it, whether it's 10%, 100%, 50%. I don't know what the amount is. So I am looking for this quarter, undoubtedly, for our net retention to actually go up. In the last couple of quarters, the net retention of Palantir actually has been going down. I can't find our net retention for the last quarter, but in 2022, our net retention went down to 115%. In 2021, our net retention was 131%. And I remember at some point in time, our net retention was actually at 145% for one of the quarters. So our net retention is absolutely 100% going down. If our net retention does not go up, if our net retention is not above that 115% or preferably 120% plus, at least that's going to be bad. But if we do get 120% or 125% or anything better than last quarter, especially if it's significant, this is going to be extremely good. That means that we are growing as a company and we are in the right direction. That means that AIP clients are actually coming and stacking on top of Palantir Foundry clients. I need to see that the net retention is going up for Palantir. It's not going to be the be it and all of Palantir or, the client growth, but it's huge. Also, I want to see the client growth being there. I want to see that the customers is going up. If net retention is going up and customer count is going up, then I truly, truly do believe that the last quarters of this year and early quarters of next year are going to be absolute home runs, and we can get past that 30% CAGR. If Palantir can hit 30% CAGR again, like they were a year ago, a year and a half ago, whatever, then Palantir can justify this meteoric rise. If Palantir, for example, only grows 12 or 13% like they're predicting, I don't see Palantir actually justifying this price. If Palantir at least hits 18 to 20%, I believe that the price is going to stay still, steady, and justified because they're growing at a faster pace than what they were expecting. This is what happened last quarter. We were expecting 12 or 13%, and I believe we got 18%. So I am looking at net retention going up, customer count going up, and I'm looking at revenue growth or at least getting where we were last quarter with really good forward-moving guidance. If forward-moving guidance is spectacular, hey, we didn't grow our revenue, however, we are prepared to go to the moon in terms of revenue, growth, customers, retention, then yes, Palantir can fill its shoes and this price is justified at $20 a share. But at the end of the day, for us to be where we are right now, everything needs to be going right. Doesn't mean it has to go right this quarter, but we need to have, at the very least, forward-moving guidance for the future. And if that happens, the price stays still. The price stays steady. Now, earlier today, Dan Ives, the same analyst that came out and gave us that $25 price target, came out and there's a 1-minute clip of him on CNBC where they followed up with this and asked him, hey, what do you think needs to happen in earnings? And this is what he said.
Get out the popcorn for big tech.
All right, you're front running me now. I did want to ask you about Palantir. You call Palantir the Messi of AI, obviously referencing the international soccer star. What are you expecting from this report? What can they say that we haven't already heard? They've already told us they're the leader in AI. We know they're working with the government. We know they're gaining commercial customers. What else can they tell us that we haven't already seen?
It's really about showing not just on the government side, but commercial success. And I think that's really what I think is the golden jewel for them is that parlaying the success in the 202 area code to AI now more on the enterprise, because that's really where the gold rush is. And as a pure play, they're the best pure play AI name out there, which is why they are the Messi of AI. And I think this fourth industrial revolution, they are going to be a major player along with big tech.
I want to put you on the spot. We're showing the Palantir chart, by the way. Palantir shares up 5% right now in the pre-market.
I promised you an article earlier where the DoD just names Palantir their partner, and this is the article. Palantir selected by the Department of Defense to automate spectrum coordination workflows. As part of an ongoing interagency effort to facilitate the shared usage of critically important mid-band spectrum, Palantir software will enable DISAs, which is the Defense Spectrum Organization, to support formal and informal coordination processes between the Department of Defense and commercial licenses. Existing and future government activities in the spectrum band are vital to protect national security and ensure military readiness. Palantir software will be used to integrate multiple existing functions and capabilities into a single infrastructure that will result in a more efficient workflow, reducing the timeline for license coordination with the DoD, to establish sharing agreements and enabling deployment of 5G wireless services within the CPA-PUA boundaries. Palantir software will also be used to demonstrate the ability to support more advanced spectrum sharing use cases. And I quote, guys, where's Snowflake? Where's C3 AI? Where's Databricks, Datadogs, and all the other companies? Where are you guys at? Why is it Palantir that's being used for all of this? I'll tell you why. In 2016, Palantir sued the US Army. Palantir won, and as they say, the rest is history. If you guys want to check out that live, please click on the link up above. Click on this link right here where I go over some of the information. Tomorrow morning, I'm going to be going over this with Amit in detail. Please make sure to watch tomorrow's morning show. We're proud to partner with DISA DSO to support the complex task of sharing limited spectrum resources between federal and commercial uses. We're excited to rapidly deploy software that will accelerate and automate coordination workflows and enable the increasingly dynamic and efficient use of spectrum. As military and commercial use of radio frequency spectrum continues to grow, spectrum coordination will be increasingly necessary to preserve the effectiveness of critical national security capabilities while enabling U.S. commercial leadership in 5G and other critical technology areas. Palantir looks forward to working alongside the Department of Defense to deploy innovative software solutions and support advanced spectrum sharing workflows and processes. Palantir, no doubt, had a massive run up. And every single dollar that Palantir goes up, $10, $11, $12, $13, $14, $15, $16, $17, $18, $19, and now $20. Everybody is calling that Palantir is overvalued and the AI bubble is about to burst. If we are in fact in a bubble, as I said, it's just the beginning. And bubbles don't just burst. Look at Tulip Mania, look at real estate, look at Beanie Babies, look at everything. It takes time. Also, I don't think that we're in a bubble. I think that it's either put up or shut up. And Palantir is going to put up. Palantir is going to be able to show the goods. And that's why you have articles like this about Palantir. I am looking forward to earnings. Also, I want to say something. I do this for my channel members, but I'm going to be very nice to you guys. If you have shares of Palantir and they're just sitting there, think about covered call strategies. I literally make a weekly salary. Probably I make as much money as you do at work just selling covered calls of my Palantir shares and my SoFi shares and my other shares of my other stocks. I do the same for my kids in their accounts. If you guys want to know more, please click on the link down below to become channel members. It's $3 a month. You guys get to buy me a cup of coffee and yeah, you support the channel. Guys, thank you so much. I'm going to be live with Amit tomorrow morning on his show, and maybe I'll join him today for a show at night because you know what? I'm having a lot of fun, and I love to talk about Palantir. And now, final thing I want to say. There's a lot of people that hate on Palantir, a lot of YouTubers, the anti-grifting grifter crews that I thought would be man enough to admit when they're wrong, but people are not. And I realized that they're literally just hating. And it's sad, you know what I mean? How many people listening to this video right now that are not part of the channel, that are like outsiders or civilians, you know, not part of the Palantir crew? How many of you guys lost money not investing into Palantir, not investing into SoFi because they weren't profitable companies or aren't profitable companies in terms of SoFi, right? But soon will be. You got to understand one thing. The Palantir army, the people that invest in Palantir, we are growth stock investors. That's what we are investing in. We are investing in pre-profitable companies because that is the largest growth that you're ever going to have, or just profitable companies in terms of Palantir. Once the company is already profitable, there are still gains to be made, right? Like Apple went from 900 billion, 1 trillion, 2 trillion, 3 trillion. However, that's an extreme rarity, and you can still get more gains with a true growth stock company. And that's what we're looking for. Some people call us stupid or crazy, but you know, I want to see those same people that said stupid and crazy. Show me your 7-figure stock portfolio. Show me your gains, because in 2022, all you index fund investors were having a ball because you weren't losing as much money. But where you at this year? You guys are not making anything remotely resembling dope gains. Now, index investing is great for most people, and especially if you're old and about to retire. But bruh, if you young, you able, you got money, you're working, don't you want to experience dope ass gains? That's my point of view. As a 40-year-old man, I want one more big push, and then I'm going to invest in boring index funds and dividend plays, sure, to get cash flow. But as I'm young, aggressive, able to move, work, so on and so forth, why not reap the rewards of risking it all? Look, everybody looks like a schmuck when investing in Amazon and Microsoft and Apple before they were profitable companies, when they were just a thought, a vision. Now everybody's a freaking genius. But at the time, there were the same haters that are hating on the Palantir crew, hating on these investments because they were pre-profitable. Every company is pre-profitable until they are profitable. Guys, thank you so much. Everybody have a great day. That's all I got to say about that. I'll see you guys on the next one.